तो इसका वेटिंग तो मेरे पास है हाँ क्या करना
this book of prime entry. So this is so first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all these things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October, October 1, cash 1,000, 2,500 in the bank. 1,000 cash, 2,500 in the bank. So it is balance brought down. Balance. Then Jana put her own money into the business bank account. Own money. Okay. Own money is nothing but capital. Own is nothing but capital. So Jana has put her own money into the bank account. So money is coming in bank. So money is coming in bank. So and what date this is first? So it is on first itself. Okay. On first. So money is coming in bank, debit bank account, and who is the giver? Who is giving it? So it is capital. So complete the entry. We have right here October 1. Wait for you. So it is bank. By bank. We received through bank. Next. Bought goods for resale or credit from 5,000. Purchases. Purchase 5,000. So what date? Date is on 2nd, October 2nd. October 2nd. So purchases account debit. Their account credit. Their account credit. Over. So again this year trade view. Again this year trade purchase. So the entry is complete. Next. Paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank revenues. Rent 1,000. Debit card bank. Rent and bank 1,000. What date it is? 2nd. Money has gone out from bank. Okay, so rent amount, money has gone out from bank. So it will come here. So next, so we have to record it. The opposite side is rent. So rent amount. So 1,000. October 2nd. Sales are credited to Yash. Sales and Yash. Sales are credited to Yash. Sales. What date? 4th. Sales are credited to Yash. Sales are credited to Yash. What is the amount? 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be limited. Why are we debiting him? Because we have sold goods. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th. Cash sales 700. 4th. Cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be written on the opposite side. Sales account. So cash. How much? 700. So what date? 4th. Paid cash into bank account 500. Paid cash into bank account 500. What date? 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is coming. Paid cash into bank means money is coming in bank but going out from cash. So here, so it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your trade bank. So against this, your trade cash. Next. Paid the money owed by check after deducting 5% cash discount. So whatever money you have to pay to them. So we have bought 5,000. Goods worth 5,000. And we have to pay after deducting a discount of 5%. On 6th, we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th.
Okay.
We have paid there 250. Discount received is 250. And money is going from bank 4,007. So to whom we have paid? We have paid to Dev. So to Dev when we have paid on October 6th. How we have paid? We have paid bank 4,750. discount received. This we have to transfer to discount.
जाओ जाका उससे क्या है उससे क्या लगता है बोलो तबीयत अच्छी नहीं है को जाओ सर्दी हो गई है बाहर अंधार में हाथ बहुत दर्द है 3 दिन से ये कर लो कहीं नो कर जाओ
Only about 1/6. About 6. Okay. So we are trying. So next. Paid for stationery by cash. 30. Paid for stationery by cash. So what? It is on 6th. Paid for stationery by cash. Sixth, we have paid stationery by cash. So money will go out. 30. Stationery. Stationery. Money will go out. So what you have to do? You have to write in stationery here. October 6th. So through cash, we have paid stationery. Cash stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. So now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1000 for 4,750. It is 5,750. 10,000 minus 5,750. So what you have to do? You have to write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5,750. Here you will get 10,000. So 10,000 minus 5,750. You have to subtract one from the other. So 10,000 minus 5,750 is 2,000 minus 5,750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total of both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. So this side also it is 1,700. Here it is 5. So here it is 1,700 minus 530. 1,700. Here it is 1,170. So you write down 1,170 here. You write down 1,170. So that the total the sides become equal. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts because they will be carried forward for the next accounting period. So cash capital account is 8. So this will be carried on, true balance carried on. So will become by balance brought down. By balance brought down 8. So only the dates will change. So here it will be October 7th. Here it will be October 8th. Or October 17th. So balance brought down. So there. So purchases account 5,000. So there is no need to balance. This is 5,000. You have to just this will directly go to the trial balance. So they have account here also 5,000. Here also 5,000. So there is no question of balancing here because the total of both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes account. So balance carried on. Balance carried on is 3,000. So this will be brought down again. Balance brought down 3,000. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will be straight away go to trial balance. So this is the end. This is over. What else we need to do in this? So balance the accounts at first and bring down the balances. Okay. Balances. This is how you have to do this balancing. Yes. So okay. So we'll catch up in the next class. dear friends, let's continue with activity 1.2. So this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes, this is David Hopkins' latest book. So complete the entries for the following table with information taken from the accounts of the trader. So name of accounts to debit, name of accounts to credit. So what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers that you understood. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is given. So bank credit. So bank. So we are right here bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses versus rent amount. So postage and stationery paid by check. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only you can use. So postage. So here, why? Because money is given. Credit what goes. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or it is given one. So money will go out from the bank. So here so heating and lighting bill paid from the bank account by standing order. So heating and lighting, heating and lighting. So heating and lighting expense. Right. Paid wages by check. So what is happening? Wages upon by bank. Why? Because money is going on to bank. Rent received directly into the bank account. So what is happening here? Money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent. So you specify because rent can be paid. See here rent is paid. So here the rent is received. So or you can write rent expense account or rental income account. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can. So again, interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So bank account. Loan received from a friend, B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are through bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account. Bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we pay the loan, Lee will
Because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be paid. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases account debit to bank. Bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier is what is happening. You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no? Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? No, it is purchase return, not suppliers. Okay, so this is not under. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. Sales return. Sales return, and we will credit bank because money will go out. So carriage inward paid by check, whether it is carriage inward or carriage outward, money always will go from bank account. So carriage inward. We have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So here it will be refunded goods to supplier and bank the refund. So we have received the money in bank account, will be debited, and purchase returns will be paid. Purchase returns are opposite of purchases. Purchases are debit, right? Purchase returns are always credit. Okay, purchase returns are always. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we'll discuss practice questions from cash transactions, David Hopkins latest book. just have a look at. You can try solving this question on your own. So, which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So, what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive. So, it will be debit entry. Sales returns, you don't receive. Wages, you don't receive. So, this is the thing we will receive. So, this is the answer. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So money will go out. Obviously, money will go out. Create a bank account will be created. Money will not come. So money will go out. So then, when you are selling, Amir bought goods. What goods? When you buy, you will pay carriage goods. So this is the so C is the. The trader takes money from the business bank account for monthly bills, which entries recorded in the expense books. So money from trading bank account for personal use, which entries to the expense books. So personal use, don't use. So money will go out. So it cannot be we receive. When we receive, you debit bank. When we receive, you debit bank. So obviously, when this cannot be the entry. So drawing shows the correct entry. So these are practice questions for David Hopkins latest book. So what you can do is you can just have a look at the next problem. So below are the financial transactions on behalf of the business who make necessary ledger accounts and who is the following financial transaction to them. All transactions use the debit account. Mera Cummins business will take 20 company to run maximum. Mera then are the following financial transactions. Purchase machinery, paid rent, bought goods, sold paid carriage invoice, sold goods, paid for hailing ATV, received rent, bought cooking machinery, bought mortgage. So what you can do is you can try working out these questions on your own. And suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description, in the comment section of the video. So you can I will just guide you out. So I will work out the problem and try to work out. So till then, have a good day. Bye.
Dear friends, welcome to Shasha's virtual class. So today we'll discuss TT 2.1. So this is David Hopkins' latest book, latest review. So we'll start. So below are the financial transactions for max business. What's the transactions to ledger accounts? All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically, we need to know
the personal account. The personal accounting. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working on this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar. Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency date and the currency. Always. Okay, write always that thing. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So they think that if they have debited, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused. Like so Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you return 2000, here also you return 2000. See, debit 2000, credit 2000. Obviously, debit and debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Date. October 2nd. So it is always credit. This side is always debit. How much? 300. See, sales is a revenue. Sales is always created. Wait all incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules and accounts. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing we should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the account they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in, credit what goes out. That also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what Max is doing. What Max is doing, whether Max is giving, Max is receiving or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is what, this is very, very important. Okay? Now it has been clear to you. So now it is everything is easy. So that the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost to. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200 with on what date? On 4th October. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This is always debit. This is always credit. Always in dollars. This in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how you have to remember. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with a debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important. So that the logical flow of concepts is very clear. Okay. So very clear. Logical flow of concepts is very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date? Date is very important. 8th. From whom? From Lim inside. Yes, so you are right. So purchase account is debited with Lim. Purchase account is debited with a credit to Lim, and Lim account will be credited. It is Lim account. We have to prepare Lim account. So October. So why are we crediting Lim? Because we purchased from Lim. Understood? This is how it is. This is how you have to understand the concepts. Very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to Homer for 1100. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer receives. Homer receives. So Homer receives. So Homer account will be debited. Debit to the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Homer account and we have to write in sales account. So Homer account and sales account. Homer account. Homer account. So Omar account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Omar account is debited. Why? Because we have sold him. Sales. Sales. Omar account is debited with sales 1100. So now Omar account is debited, sales account is already there. So his sales account we have to write now. We have to write it in sales. Omar account, October 8. Omar account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina, where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. One more about sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and it is on 11th, October 11th. And what is the amount? Go to Ali. 300. So we have to write 300. Ali 300, sales returns 300. So there's no more. So he has returned everything. So sales returns amount 300. We have to debit. Sales return amount will be debited with Ali's account 300. So this is how it is. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for Penny's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods to Lee for 1,000. So return goods costing 500 less discount to Ting. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid B for goods bought on 15 November. Received full payment from D. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng, whatever. So business, post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Pinch account, Pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is returned goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct now? 5, 15 is a 45. So 55. 55. Okay. So purchase goods from B. So again purchases. Purchase account is already there. So B. So cost 4,800
less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. 3840. So 3840. So you have to record it at 3840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to PNG. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? One, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first, you bought goods from Tinge that cost 5,000. So first you have to bear purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4250, 4250. Because purchases is an expense. So expense account is always debited 4250. So date always you write the dollars. Amount we have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So So Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next. The entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next. Sold goods to Lee for 1,000. Sold goods to Lee. Sales and Lee. Sales account. sales account and leave account. So how much is sales sold goods to leave for 1000 and November 5th. November 5th. November 5th. 1000 credit to sales because sales is an income. So credit all income means so leave. So leave because leave is the receiver of goods. So this sale is always credit. This sale is always credit. By default, this is always credit. This sale is always credit. By default, so dollar November 5th. So where are we debiting B? B because we have sold in sales. So we have sold in. So debit. Sales account will be created because it's an income. B account will be debited because it's the receiver of the goods. Okay. And then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 4 and 50. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V. And it is on 15th. 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 November 15th. Purchases account will be debited. 3840. 3840. So purchase account will be debited 3840. We have purchased from way. V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, V would have given us the goods. So November 15th. November 15th. So 3840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases. 3,840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid week for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from Lee. So received. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and V. Tinge. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3,795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th, we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. So November 25th, we have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default, we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1,000. 1,000 from Lee we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Penn's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare, checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything. So there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be created. Sale account will be created, Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in, asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases, and we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So we will receive joint limited goods. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Allen for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount, so that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3 David Hopkins the latest book. So okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practice questions from David Hopkins lesson number 2, credit transactions. So which of the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. In Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at cross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold, so sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So will be recorded at 900. Yes. Zara will receive, Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 2882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books or books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so %5 of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. You record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. You record all purchase returns and cash book. Cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase returns journal, purchase returns account. So then Cora account, Prem account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase returns journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. Amount in dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So at a rate discount of 20%. Again from Cora, what date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? $12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to record, prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier. So and so what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned? Cora. Cora. 320. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. So it is in dollars, but this is also in dollars. So here, next, first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, returned, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320, worth 320. So this gives 8,000 plus 4,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods worth 320. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of cash discount will be different. So in this case, here also it's 5% cash discount, here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to Prem, how much you have to pay? Prem, so the entire amount you have to pay. So Prem is 14,000. Discount is 280. Discount is 280. 14,000. Prem 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,720. So this is the amount you have paid to Prem. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November 9th. So you have made the payment of November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, frame 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800. So purchase journal. See, this logistics is very important. So when you are doing control accounts at this time, you will come to know. So you may have to reconcile so many. It's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we will enter it in purchases account. We record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10. Purchase returns journal. So what is it? 320. So now we have to prepare other accounts like Cora account. So we have purchased from Cora, so Cora's account will be created. So always write the amount. Always write the amount. Cora account. So Cora account will be created. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. 1st and 5th. So on 1st it is 8,000. On 5th it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchase journal. Okay. Purchase. 8,000. Purchase 12,800. So here this side. So it will be. So this is number 1. Because purchase journal, it is a journal. Okay. So purchase journal. So this is Cora ledger account. So now next, what is it? So what date you are returned? You are returned on 4th November. So how much? 320. Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be created. So individually you have to write. Or you can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. So November 10th. So cash book. So we are right here. That's all. So 13,304, not 13,004, 1,304. So that's also discount received. So what else is there? So I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and the book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the a problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particularly, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between. So there should be one line. So again, similarly, this side also there is one column, another column, date one column, So this is date, one column date. So details, particulars, then discount received one column, cash one column, bank one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st, April 1st. Okay, so one more thing. So whatever we receive, we have to write here. So all that is received, we have to write here. And whatever we pay, we have to write here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account, so this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay at the time we receive discount. No, we receive. So it's a credit. So but when we receive, at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. So this is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is receipt or paid. So here they are also discount received they are written. Okay, so discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you so that you understand it is easy for you. Okay, so don't write this. So don't write. This is for you, just you for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, they are paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third, 800. On third, sales 800. We are receiving. When we sell, we receive. No, so receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So bank the cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Banked cash. So money is coming in bank. Banked. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Bank to cash. So remember, always you have to write like this. Okay. So my bank to cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Bank to cash, and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay, so a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all. Okay, so then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash, cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited. Cash account will be debited and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also. So they get confused. Understand this. This is very, very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning, okay? To keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th? On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from banks. This payment rate, so money has gone out from bank. So against this here you have to write cash, and this is called contra again. So against this is value here. Here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on account and bank on the on another account. Same. So very careful. Okay. So lot of students commit mistake here. So this is very important. So this is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked, okay. So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash bank. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1520. 2700 minus 1520. Okay, so this will be 1800. So it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 1180. If you add all this should be 10 by 700. So in other words, when you are balancing, so both the sides should be same. Okay, so here balance got down. So balance got down. Whatever is carried down here, it will be brought down here. So 1 1 8 0. So this will be 500. So this is how it is. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So we'll be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul which cost 14,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books. Any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So you will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit, and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment, 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B. Jones, a supplier, has been posted to C. Jones' account in error. So what is the right entry? Received from B. Jones. So we have received credit note. So we have to debit B. Jones. A supplier. Okay. So we have to debit B. Jones. So what is the right entry? We have to debit B. Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B. Jones. Okay. Received from B. Jones. So we have to credit B. Jones. credit note. We have to credit visions or debit visions. We have received, no. So we have received means we have to debit visions. We have to debit visions. Debit visions. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited the C Jones as a wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. This is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principle. Second one is also error of principle. So this one is opening journal entry, and this is again error of principle. Instead of debiting one person, we have debited some other person. That's all. So this is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do a lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry, okay. So books of prime entry, practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross-check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at the net of. So 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. Expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. We have not done this. So it is under added. It is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then very concept is very clear. Then let us have a look what is this. Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase, purchase, return, return goods, purchase, return. So basically this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely uh, discuss this question once you let me know. Okay. So till then, have a good day. Good night. Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have a credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset. So it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have to add it 234. So that is balance. See, balance is 234.
So it will be carried down, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So we have to just put the total and carry forward to trial balance. Discount received account. So 110 plus 130, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side to make it 1340. So it is 740. So 700. So if we put 700 here, so that will be balance carried out. Balance carried out. So 700. So both the sides, the always total should match. So 1340. So if we get 700 here, so this will match. So it will become 700. So it will be very important. Next, A and B limited. A and B limited account sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So just so 700 plus 450 is 1150. So 1150. So it will be balance. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received, we have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing account. Motor vehicle. So balance carried on same amount. So that both the sides is the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 220, 45, 265. So 900 minus 265. 635. So balance carried out is 635. So the total, if you put balance, to be so to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there we have I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavy. Since credit balance is heavy, see 5,300 and this side it is 3,500. So since it is credit balance is heavy, So it will be here, this side, balance get down will be this side. So 5,300 minus 3,000 back. So 1,800. So balance carried down will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances, why trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shasha's Workshop class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own, and you can cross check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given the concept of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business running a business operation. So it is income for you. So you can it is generated regularly, or it is the main source of your operations. So expenses the expenses which you incur like salary, rent, all those things. Okay. So rent is normally. So rent is let's assume it's an expense because since they are not specified. So if you see other line of here rent receivable, here rent receivable is there. So this is income. So let us assume and presume things. So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Yeah. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have kept some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we write here. So trade receivable is an asset. Why? Because we have sold off credit and that person has to pay. So these are customers' accounts. So trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you have to your money will be out of. You will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending postage to courier or all those things, you know. So then next, postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors. They include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed is discount received is also other income because when interest received is not main revenue from operations. Whatever is not from main revenue operations, it's considered as other income. Okay. So rent receivable also can be considered as other income. So all these are the revenue. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts. So we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you execute the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is a customers ledger. There is suppliers ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers. Division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash books for the bank and cash accounts. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay. So capital is general ledger again. So customer who buys goods on credit. Customer who buys goods on credit. So it is we are selling and who is you are buying. So the customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, you are it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger itself. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Think it. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book we can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So there is Okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts. Receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though you mentioned sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit, because customers and sales are related. So purchase ledger. So even though it is purchase ledger, is for the accounts of suppliers. It is not for the account of purchasers. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue. Revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here. Other income. So other income is like interest, all those things and all. Expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so that is nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal also. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts, and so that the concepts accuracy as you proceed for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember, there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger. No. Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is told in the dash ledger and is an example of dash account. So heating and account is told in the general ledger. General ledger or nominal ledger, and is an example of nominal account. Expense account. Okay. So expense account is in. So expense. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again. Where do you record? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So Purchases ledger contain the accounts of suppliers from the original device, correct? So the hitting and letting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Good, got on rate or recorded in the? No, it's not in sales, not a sales. Non-current, no, non-current. So only three types of ledger are there. So only three ledgers. Okay, so when they say ledger, okay. So then, goods gone on credit or recorded in the general ledger. So then, a dash is a asset what used in the business for a long period, so non-current. So we have chosen this, nothing is related to sales. You just see, the dash ledger contains accounts of suppliers from whom the business buys on credit. So purchase ledger. The hitting and letting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash non-current. So this is again purchase ledger whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So if I get confused, see again the concept should be very clear. Okay. So dear friends, welcome back to Shasha's virtual class. So classification and division of ledger. So let us have a look at the practice questions today. So which account is most likely to be kept in private ledger? So drawings, interest received, rents, it's what is very private. So obviously drawings is very private. So how should cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no. Asset, no. So D. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business will use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross-check and to keep theoretical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been instructed from the books of small online retailer and 31st December. So they are given assets, liabilities, expenses, all these things. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this drama on your own. So basically, it's very easy and very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. So how will you do it? let's start. So, before starting, so property. What is property? Property is an asset. Asset always should have benefits. Property always should have benefits. Motor vehicles. Motor vehicles is an asset. Always it shows the benefits. So office furniture. So remember what are the so when you are learning where it's a better assets and expenses. Normally have differences. Assets and expenses normally have differences. Similarly, liabilities and income normally have differences. By default, okay, by default, they are always assets and expenses. Assets and expenses are always written balances. Liabilities and incomes are always written balances. So office furniture is an asset and balance. So computer is an asset and balance. Sales is a sales is exactly reverse of sales is a balance. Purchases is an expense balance. Purchase difference is exactly reverse of purchase difference is balance. Motor vehicle expense is expense. Advertising is an expense. Office expenses is an expense. Stationery is an expense. Cash is an asset. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance. Yes. So drawings always a credit balance because it is exactly reverse of. So how we can compare the balance? So remember all the names of the accounts properly, motor vehicle, office furniture. Motor vehicle, office furniture, office furniture, sales portfolio, sales portfolio, sales return 600, purchases 6,000, purchases 6,000, return 500, motor vehicle expenses 4,000. Advertising 1,600, advertising 1,600, office expenses 1,000, office expenses 1,000, stationery 400, stationery 400, cash, bank credit. So this is the so let's catch up with the next class. Yeah, friends, welcome back to Shasha Perfect class. So let us discuss activity 6.2 today. State which of the type of errors in the following purposes. customer's invoice has been omitted from the sales. So we need to mention the type of error. So we need to write the type of error. So before this, let us have a look at what type of errors and what are the different types of errors. So basically there are six types of error that can occur when even when making a credit program and balance. There are so type of error of omission. What is error of omission? A financial transaction omitted completely from the books of omission. Omission is nothing but omission is nothing but omission. So the name itself suggests okay. So omission. So omitting means leaving out. So financial transaction omitted completely from the books, resulting there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all, so not entered in the book of record. So the entry itself is not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expensive entered, we are not recorded. So that is one example is $100 of equipment is not purchased. The transaction is forgotten and not entered in the equipment or the cash. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So coming, you are giving something extra. So here it is omit. You are leaving out. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong amount. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong amount. Amount is one, but the amount is in the same class. Amount is in the same class. So the payment for stationery is posted to the other. Instead of treating it as a stationery expense, you have treated it as a so both are expenses. Stationery and advertising are both class expenses. So same thing. So this is very important. So expense or revenue or admin or marketing or so it is the same class, but instead of posting one amount, you are posting some. So the extra you are putting some. Error of principle. What is error of principle? So you can ignore the accounts. Suppose someone was doesn't know the accounting principles. Doesn't know the accounting principles. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he will record it as an asset or something. For example, a financial transaction is posted to the correct amount to the correct side of the wrong class. It is wrong class. For example, they will see payment for fuel for a vehicle has been limited to the motor vehicle. So vehicle, fuel for vehicle is a nominal account, limited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure has been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses when the motor vehicles are non-current assets. Okay, so it is wrong class, ignore it. So what has happened? The person doesn't know where to record. Instead of recording in fuel for vehicle, he has recorded as motor vehicles. So that is wrong. So ignore it. He is not following the accounting principle. He is not following the accounting rules. Rules are not followed. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you are written it wrong. So wrong amount is entered in the book of prime entry. For financial transaction. The purchase invoice is entered on the purchase journal as step. So it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of crime entry. So first time recording itself is wrong. So next, complete reversal of entries. Complete reversal means instead of debiting, they have credited. Instead of crediting, they have debited. Okay. An account that should have been debited has been created, and the account that should have been created has been debited. So a payment made to Sam is debited to bank account and credited to Samson. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account. Because it is paid. See here the accounting principles. So whatever we have learned in first lesson. So cash transactions and credit transactions you have to apply here. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept should be logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to Sam is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then not off. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So they compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount the sales journal is added to below 200. The debit balance on the customer's account and the credit balance on the sales account will both be added by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed in trial balance. They offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other out. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss here. Okay, a customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry. Because first as soon as we purchase, we are recording purchase journal. So original entry. Purchase of goods has been entered in the purchase journal. So it is for error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? We have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just give one more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct? No? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high over on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overhead means expense has increased. So sales account, income also sales account. So income also has increased. Overhead, okay, both are over. So expense is debit, sales is credit. So what will happen in this case? This is overhead. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high. Overhead on the heating and lighting. So expense. So overhead to the heating and lighting. So expense has increased. Debit. And 52 low underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. And that is also debit. So that is also debit. So this is also debit, that is also debit. Instead of adding into heating and lighting, it has been added to rent payable. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principle. That's all. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving back. So that is why a lot of students they struggle. Near the exams they struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So never do that. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance on 31st December 2021. It does not balance. Rewrite the trial balance, rewrite the correct trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses, all assets, and expenses are debits. All incomes, all liabilities liabilities and revenue or incomes are credits. So the credit balances. Okay, remember. So this is the basic rule for trial balance. Remember this. All expenses and again, all assets and expenses are debits by default. All liabilities and revenue or incomes are credit by default. Okay, by default. Normally by default. Very important. So before learn this, by heart this, whatever. So before starting this question, so try to answer yourself and then you can have it. So plant and machinery is a debit balance, so this is correct. Loan from debit. Loan from debit is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rental rates are expenses. They are not credit. This is wrong. So 3,000 rental rates, don't write here. So cash is normally a debit balance. It is an asset, so it is normally debit balance. It is never a credit balance because cash can never be owed back. So 200. General expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, which is again other income. So it should not come here, it should come here. So bank debit balance, normally trade receivables asset, always debit balance. Trade payables, yes, credit balance, it's a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns is always a credit. Sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you read out the trial balance, cross check, so it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day.
Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income, but so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much debit because you are debited. Discount received is a credit, so you are debited. So it is debited, and you are not credited to discount received. So you are not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's also it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from lease books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset debit. So trade payables, liability credit. Loan from Ting, liability credit. Drawings is a debit. So balancing figure is, so capital, so basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay. So difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. And this is from David Hopkins.
Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to lie $600, it will be like that only. So return goods which had cost were odd 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now, so it is being returned. So 20,000 less, 200 less 10% is dollar 180. 200 minus 10% is 180. So purchase goods on which cost 200 before trade discount of 10%. So before trade discount of 10% means, so again it will be dollar 2,800 minus 10%. 2,800 minus 10% is minus 280. 2,800 minus 10%, 2,520. So it's 2,520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2,520. Sold goods to chain for 1,300. So no discount here. Law return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount. We did give lie any discount. So have you given any discount to lie? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So it will never be given. So even though the question says like that, but we are not supposed to suppose, because here they are not mentioned whether we have given them any trade discount. Or it may be that there is a mistake, printing mistake. So if that is the case, then yes, because everywhere it's 10% trade discount. So let us consider it's 10% trade discount. It will be $540. So here it will be lie return which it cost 200. So minus 10% will be $180. Then Gerard paid car and linked the amount due to them after deducting 5% cash discount. See, so many calculations are there. Lie and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us calculate. So there is space here. So Gerard. Okay, so Gerard. These are the books of Gerard only, right? These are the books of Gerard. Gerard paid Khor. So we are paying to Khor. So remember whose books? Gerard books. Gerard will never. So Khor and Lip. Okay, Khor. Khor, how much we have to pay? Khor we have sold 2,700 minus we have returned. He has returned 2,780. So 2,700 minus 180 is equal to 2520 minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? 239. What is cash discount? Cash discount is 2520 plus 126 plus now core is over. So now lie. Sold goods to lie 600. Sold goods to lie. Or and limb. So limb. Or and limb you are doing. So limb you right here. Lie you right here. Lie 600. How much has been returned? So 540 minus 1. Is 360 minus 5%. 5% is cash discount again. Cash. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then core and lie and chin paid their own. Lie and chin. Okay, so now limb. So limb, where is limb? Or over, lie over, or over, limb. Limb is 2800, that is 2520. So are we returning anything? Limb. Is limb returning anything? Are we returning anything to limb? No, we are not returning. So 2520 minus 5%. So that is equal to 126 minus 26, which is cash discount again. Cash discount. So that is equal to 339. So now Chin. Where is Chin? Chin is here. Sold goods to Chin. So Chin has not returned any goods. Okay. Chin has not returned any goods. Only Lai returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Returned goods. Okay, so you return goods which had cost Gerard rupees, Gerard dollar 200. Lai return goods which had cost him 200. Lai. We are purchasing. Okay, so there is one sales return and one is purchase. Chin. There is no return by Chin. Sold goods to Chin. There is no return by Chin. So 1300 minus balance. So that is nothing but 1300 minus minus by see, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct amounts. So first these are so many calculations. See, so many different calculations from there. Though this looks simple, some students make mistakes even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be debited by how much. So debit. Okay, so purchase goods from Khor, which cost 300 less trade discount. So we are purchasing from Khor. So Gerard is purchasing from Khor. So purchase Khor So why Khor because Khor is giving the goods. So he is the person who is giving. So when we purchase, when Gerard purchased, Khor gave the goods. He is the person who is giving. This is the account that is giving the goods. So that's why the account will be paid. So amount will be 27. Amount will be 27. So now, someone puts to lie for $600 less 10% trade discount. So here also it's both for car and discount is in this process. So 500. So sold goods. So sales account. Sales is an income always 390. And who is receiving the goods? Lie is receiving the goods. So lie account because he is receiving. Lie account is receiving. By his account will be debited and sales account will be credited. Return goods which had cost Gerard 200 less discount to her. So return goods which had cost Gerard. So this is who is returning purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to COR. So COR is receiving the goods. When your return is back the goods, COR is receiving. So it is receiving COR amount. So then purchase goods from Link which had cost 2,800 before discount of 10%. So purchase goods from Link. Then purchase goods from Link. Purchase again purchases service purchases. Purchases are always purchases. So purchase about from Link. Giving the goods. So Link is giving the goods. So account. Is giving the goods. Then sold goods to Chin for $39. Sold goods to Chin for $39. Sold Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account. Limited. Sales account. So lie return goods which had cost you $200 less discount. Lie return. This lie return. This is you are sold to lie. This is you are sold to lie and is returning the goods. Maybe they are defective. That's why lie is returning. So lie is giving. So you have to credit whoever gives, right? So lie account will be credited. And it is sales return. Sales return is reverse of sales. So it is done. Sales return. So then it is done. Then now so this is also one of this. You are not paid currently the amount after deducting 5% cash discount. So when you are making when Gerard is making the payment, who will receive? Car will receive. So car will receive car account and Lim also will receive Lim account, car account, debit and credit toward bank account. Bank. But one more thing is that what is the discount account is also there. Gerard paid car. So when Gerard is paying car, he is not paying certain amount, so which is cash discount. So it is discount received. So it's an income. So discount received will be credited for car it will 126. Okay. Car it will 126. And limit will be again here also discount will come. Discount received. Okay, so here also it's 126. Both for car and limit, discount received is 126. So bank account is how much? Bank account is 2394. What is the amount? 25, 20. Get the transaction. On
Dear friends, welcome to Shasha's virtual classroom. So, we will discuss accounting for Cambridge IGCSE and overall coursebook, Catherine Coupon, Alistair Mackenzie. So, this is third edition. So, particularly in these sessions, we will discuss activity solutions. So, so these are the contents. First section, introduction to accounting, double entry bookkeeping, the trial balance, double entry bookkeeping, part B, petty cash books, practice questions. So this is a book you have as a hard copy with you. So if you don't have, please get it. Okay, so this is activity 1.2. So we'll discuss this. But before this, we need to know certain things. So before attempting this question, we will discuss certain things which are very important for this. So these are the topics which have been discussed in this lesson. That is introduction to accounting, bookkeeping versus accounting. Why measure? Why do you measure profit and loss, or profit or something whatever? So what do you mean by assets, liabilities, capital? What is accounting information? What is trade receivables? What is trade payables? What is inventory? What is asset statement? What is statement of financial position? All these things. So first thing, what is bookkeeping? So we'll have just a brief overview. So what is bookkeeping? Bookkeeping is primarily recording business transactions in detail. That's all, nothing else. Okay. Recording all the business transactions in detail. Who does it? Obviously, the person who has a sufficient evidence regarding the business transactions entered will enter will maintain books. So that is known as bookkeeping. So what is accounting? Accounting is something which starts after bookkeeping has been done. So accounting means basically compiling, reporting, all those things, which is done after bookkeeping. So this is the secondary. So this is primary aspect. This is secondary. So in accounting, we take the sources from bookkeeping and we prepare a statement of profit and a statement of profit or loss and a statement of financial position. All those things we prepare. So basically, that is also you can refer the textbook for all this in detail. Just this is just a brief overview. So then next, why do we measure profit and loss? Why? So basically, when anyone starts a business, basically he should know how much of profit has been done, what is the status, where is he standing, how much of as earnings he has made, and how much he has kept it with him. So all those things he has to know. So that is why we need to measure. Otherwise, this is the if you are not capable of measuring, then it is not worth considering continuation of the business at all. So and if any changes have to be made, what any improvements have to be made, all these things are based on the financial statements. Like without measuring what is the profit or loss or whatever, so you will not be able to decide. This is to decide and to motivate yourself or to get more upgradation or more knowledge from whatever has been done. So then next one. Next aspect is assets, liabilities, and capital.
So Brian, so what is Brian doing? We have to see
What is assets?
so Brian
See, let us say Mr. David. Okay, Mr. David.
and for Ken it is person.
He has got. He stays normally. He stays at two places. Let us say he stays in New York,
Receive. Who is receiving?
and he stays in
Ken is receiving. And when Ken is purchasing,
Los
who
Angeles.
is
Let us say he stays in New York. He stays in New York, and he is. So there in New York, he has got a land worth 1 million, worth 1 million. So he has got a building
now Ken sold goods to Brian.
worth
Sold goods to Brian. So sold goods
2 million.
to Brian.
So okay, so Los Angeles also he has got land worth 2 million.
So if Brian is purchasing, who is
So building also
Ken is giving. If for
he has
Brian
got what?
is purchases, for Ken it is
5
sales.
million.
And
Now
that's it.
he is interested in starting a business. He is interested in starting a business.
Brian sold goods to Ken. Gain sales.
By name Hopkins Inc.
So again it is Ken. This thing. Sales for him.
He starts a business by name Hopkins Inc. So what he will do? He will. He has started. He wants to start business in New York. Let us say he starts to on in New York.
Ken sold goods to Brian. Means Brian has purchased.
So he will use his land and his building for the purpose.
Then
This land and this building for the
this
purpose.
purchase is for him.
So these are when he starts his business. These are known as business assets. So what do you mean by asset? Asset is something which he has. Something which Mr. David has. Business assets are those assets which he has used,
And he's allowing discount because of
which has introduced in business. Similarly, Los Angeles, whatever he has, that is his personal residence. So personal residence. So these are his personal assets. Okay. So these are personal assets.
Can pay cash. And he's paying less. So if business it is discount received, so it will income.
Now, what do you mean by asset? Asset is something which a person has. Which a person has. And business assets are those which he introduces in business to start the business, to run the business, to use in the business. To use in the business. He will start. He has started with this land and building so that he will do the business from here. So now there is something known as business entity concept.
ledger accounts of grant separately and
What is business entity concept? According to this business entity concept, land
sales
worth 1 million,
get account
building
cash account all the account this
worth
and in this
2 million
so yeah
are the assets
so
of
where the ledger accounts
Hopkins Inc.
where the ledger accounts I will tell you
These are the assets of Hopkins Inc. Land which Mr. David has introduced. Mr. David has introduced land and building. So he has invested how much? He has invested 3 million into the business. He has introduced 3 million into the business. What does the business entity concept say? According to the business entity concept, whatever is invested by Mr. David is his capital.
so first will come inside RAM so can
And that
debited
is
in sales
3 million.
can debited in sales can debited in sales
Hopkins Inc. has assets, has assets, that is land and building, which Mr. David has given to the business, and the business has to pay back to David. Business has to pay back to David. Mr. David, business has to pay back to David. So this is how it is. So now assets are equal to liabilities. What is liability? Liability is something which the business owes back. Liability is something which the business owes. Liability is something business owes. Business owes. Suppose David has taken loan from Citibank. He has taken loan from Citibank. So how much he has taken loan? Let us say he has taken 1 million worth of. So if he has taken loan, bank money is there in bank. Who has given it? Citibank has given it. So David has to pay back Citibank. So he has got bank balance of 1 million and David has to pay back 1 million to Citibank. So assets are equal to liabilities. So he has to pay back. He owes. It is an obligation. He has to pay back. Citibank loan. Very simple concept, but few students don't get this. There is some confusion. So very simple concept. So that is what it is. Simple thing. So what is capital? Capital is the amount that the owner has invested in the business. Assets is something which the business owner has introduced in the business for use in the business. And capital is a liability which the business owes back to the owner of the business. So we have understood what are assets, what are liabilities, what is capital. Okay, next equation. So there is something known as equation, that is accounting equation. Here we have seen that assets are equal to liabilities. And liabilities can be internal, external, internal, external. So what is internal liability? Internal liability is nothing but capital. Business has to pay back to whom? But owner itself. What is external liability? Bank loan. Business has to pay back to an outsider, external. So external liabilities are known as, specifically known as liabilities. Internal liability is known as capital. Simple. So assets is equal to capital plus liabilities. So what does this concept say? The concept says when something comes in, someone has given it. When something comes in, someone has given it. Something is in. When something comes in, someone has given it. Either when something comes in, someone has given it. Either this or this. Either the owner has given it or some other person has given it. So always there is a double entry. So when something is coming in, something else will go out. When something comes down, some other thing may come down. Okay. So very important. So this is known as accounting equation. So accounting equation, assets is equal to capital plus liabilities. Next, trade receivables and trade payables. What do you mean by trade receivables? See, when we sell goods, when we sell goods. So what do you mean by goods or merchandise? What is merchandise? Merchandise is nothing but items the business deals in. So for example, furniture business. For furniture business, if a person is doing furniture business, chairs, tables, all these are goods for him, merchandise. So he will buy to sell, buy to sell. So when you sell, you may give, you may sell them on credit also, on credit. So what do you mean by on credit? There may be an agreement that the person to whom you are selling, his customer or credit customer, who has agreed to pay at a later date. So you write down, you have a record of all this. So which customer will be paying you later on. So that is known as accounts receivable. So the money that is receivable, the amount that is receivable is known as accounts receivable. Means you are supposed to receive money, that is a credit customer. So they are also known as debtors. 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 We read them as debtors or debtors. So now accounts payable. So similarly, we may buy goods. The business may buy goods on credit. From whom we buy? We buy from suppliers on credit, on terms and conditions that we will pay him later on. We will pay him later on. We will pay him later on. Supplier, supplies on credit. So credit supplier. Credit supplier is nothing but it is called accounts payable. Credit supplier. So we call them as creditors. Creditors. Accounts payable. Creditors. Okay. Next. So inventory. What do you mean by inventory? Stock of goods. Stock of goods lying idle. Stock of goods lying idle is known as inventory. So there should be only stock of goods. Okay. So what is the difference between inventory and assets? Even inventories are also assets, but inventories are meant for resale. Assets are not meant for resale. They are meant for use in the business. Assets. Okay, inventories are also assets. Obviously, assets are something we have, but we have kept them with what? With the intention of reselling them. But assets, we have kept them with the intention of using in the business. We are not going to sell them. Okay. Then, statement of financial position. So what happens is statement of financial position means on a particular date we may record what are the assets with us. So land we have, let us say land we have worth 1 million. Building we have worth 2 million. So these are known as assets. So this is 3 lakhs, 300, so 300,000, 300,000, 3 million, sorry, not 300,000, 3 million. Similarly, liabilities, that is capital is capital is 3 million. So capital and liabilities, capital is 3 million. So assets is equal to liabilities. Assets is equal to liabilities plus capital. So now we can continue with activity. So there is one activity 1.1. Activity 1.1 you have to list down the assets. So since now we have understood what is assets and liabilities, activity 1.1. So activity 1.1, a picture is given wherein you have to find out what are the assets. So computer table. So we call it as furnitures and fittings, furnitures and fixtures. So computer office equipment or equipment or equipment. Music instruments are there. So lot of whatever anything which a person has is an asset. You have to make exhaustive list. So that is very simple question. So you can do that. So now here we will do activity 1.2. So I will not be wasting time doing unnecessary stuff. Here we will do whatever is important, so that we have a lot to do. We have to do we have to discuss activity solutions. We have to do practical exercises, practical questions, practice questions or practical questions. So exam style questions and even examination question papers. So let your understanding be clear right from the day one, so that whatever you study here will again appear in AS level and A levels, particularly AS level. So it is repetition. If you are thorough here, this becomes easier for you. This becomes easier, and there is a link. So AS level, the next level is A levels. So both are important. So don't ignore. So these are very important concepts. Please understand. Inculcate the habit of understanding. Try to understand it. So activity 1.2. So let's discuss activity 1.2. So what is activity 1.2? Copy and complete the table by working out the missing values. So capital, assets, liabilities. So as we told, how assets is equal to capital plus liabilities. So if you are good in maths, very basic maths, so we know assets is equal to liabilities plus capital. So the same thing we can write it as assets is equal to capital plus liabilities. So if you write, you can write like this also: assets minus capital is equal to liabilities. So when this comes this side, it becomes minus. So keeping this side itself, when this comes, so it's very basic maths. When this comes this side, it becomes minus capital is equal to liabilities. Assets minus liabilities is equal to. So when you bring this side, so let the capital be this side is equal to capital. Okay. So many things are there. So you have to shuffle, and this is very basic maths. So if you are good in maths, basic maths, this is very simple. So I think you understood this very simple thing. So now let us just finish this. So capital assets is equal to capital plus liabilities. So we have to find out liabilities. Liabilities is equal to what? Assets minus capital. So here we did, right? Assets, liabilities is equal to assets minus capital. Assets minus capital. Liabilities is equal to assets minus capital. So Just we need to subtract this from this. So how much? 115808 minus 98750. 17058. 17058. Okay, next. So this is the answer 17058. So second one B. What is B? Assets, liabilities. So we have to find out. So again, assets minus liabilities is equal to capital. So we can see assets minus liabilities is equal to capital. It is just shuffling. That's all. Okay. Assets minus liabilities is equal to capital. So this is 347,050 minus 197,240. 149,810. So now, what is assets? So the one side of the equation, assets is equal to liabilities plus capital. We need to add both these. So 70700 plus 54210. 124910. 124910. So that's all over. Okay. So write down how do you explain to member of the class what capital is and why it is regarded as something which the business owes. According to the business entity concept, since you can explain through business entity concept, or you can directly say because as the business is invested by the person, say, business is considered as separate person itself. Business is considered as separate person itself. Otherwise, it would not be appropriate. It would not be possible to explain the concept of profit or the statement of financial position, like statement of financial position of assets and liabilities, whichever the business has. So it is not possible at all. So if you don't distinguish business from personal, we cannot define we cannot define what is the profit. We cannot find out what is the profit. It will be a mess. It will be everything will be like mess up. So we will not be able to find out what is the business profit. What how much profit we are making from business activities. So that's why capital is considered as that is introduced by person into the business, and the business has to pay back to the owner. Business has to pay back because it is something which the business has taken, which business has borrowed, which business has borrowed from the owner. So it has to be paid back. So it becomes a responsibility. So there is some sense of responsibility. Sense of responsibility. So business has to pay back. So you will do business with some sense. So wisely you do the business. So that is why capital is considered as something should be considered. So what is the that is what uh, the business accountancy principles explain to us. Okay. So this is the end of activity 1.2. So we'll discuss activity 1.3 in the next session.
record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080 card 2250 or the 2700 Snyman 1620. So you can see so so it is Snyman sold goods to car, sold goods to birthday, sold goods to Snyman again. So four sales entries are there. So we have to record it in this particular style. So this is known as format of record. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is this format. So then the next one we have to recording purchases. So we have done purchase 15,000. So purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo, 4800. So we have to enter in purchase statement like this. So take some time to write down, write it down. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman we had sold to Sun. So Snyman return, which had cost him 200. 200. No, 200. So Snyman 200. So like this, similarly, we have to record all the sales return. Snyman return. Uh, car also return. Car also return. So Snyman and car we have to enter. So the entries look like this. Snyman 200. Car 200. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are returned goods which have cost 400 to 400 to Piccolo means obviously Piccolo has given 20% trade discount. So which had cost him 400 means that is the net discount before discount. Which had cost $400 to Piccolo. So that is before discount. So we have to take after discount and we have to record it after discount. So return, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1,000. So we have to record it net of discount. So we have to record in sales, sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all these journals. Then ultimately we have to record in calculate for the payments and receipts. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods from Piccolo we have passed. All these entries have been made. All these entries have been passed. So now last entry is receipt check. Receipt check. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Simon, we have sold to Simon what this one. These are the return total. Again we have purchased. Again we have sold what this one. So total amount is 2500. So totally 2500. We have given a discount of. We have allowed a discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all sales. These are also sales. These are all sales returns. These are all purchases. These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this, this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming. So we have to do like this. So first we calculate. The cash book will look like the amounts we have received from amounts received, the discount we have allowed. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discounts. So we have to write it. So where do we write this? So all these three guys have paid. Three guys have paid. What else we did? So we entered. We recorded. We prepared sales register. Prepared sales register. So how much we have paid and what is the discount? Prepared sales journal or sales register. Sales journal we prepared. We prepared purchase journal. We prepared sales return journal. We have allowed them a discount. We prepared the discount. We have allowed them journal. And we have prepared cash return. We have prepared. So now what is that? So now we have to prepare ledger amounts. So what are the ledger amounts? We have to prepare all the ledger amounts of all the parties. So sales account. Sales account is always a paid balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the totally sales. So sales account we have to record. So first let us see the total. So this is the total of sales. This is the amount we have received. So all these amounts we have received. Total of purchases, sales returns, and we have paid these three people. These three people we have paid. Sales account, purchase returns, have got discount. These are the discount values. If we calculate, so ultimately the payment amount we have paid. So this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have the amount, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, prepared sales journal, sales register, sales journal prepared, we prepared purchase journal, we prepared sales return journal, we prepared return journal, and we have prepared cash book also. We have prepared cash book. So now what is left? So now we have to prepare ledger accounts. So what are the ledger accounts? So we have to prepare. Now we have to prepare entries. We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account. So we have to credit it. So sales account we have to record the total. So first let us do the total. So this is the total of sales, total of purchases, total of purchases, sales returns, sales return, purchase return, sales. So how do we record? So we come to ledger. So sales always is a trade balance by sales, sales, record here. So how much then sales return. So sales return is reverse from sales to journal. So sales return is one. Purchases. Purchases is always debit. So approved. So this is a purchases each and every amount. So we have to discuss them in the question. So then accordingly journal prepare all the ledger. So total amount. So now we prepare ledger account earlier. So we have to. So remember we should never have record individual entries in purchases account. So we have to record the total. We have purchased, then purchase return. Purchase return is reverse. So there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side, debit. Then synchronous accounting over. Now we have to prepare finance account. So finance with the customer we have sold goods to him. So we have sold. So we have to record. We have returned also. Now we have to record. So we have received entries related to and we have paid people. So what are the amounts? So how do we record entries related to people? So whose capital reported is the customer. So this finance account is also done. So now that is Piccolo is the supplier, is the accounts payable. So we have to credit in the pay customer, then we have purchase. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received in and cash we have paid 6,848. So we can see from the cash flow the actual what we record. Again further also we have purchased from further. So 5,500. So they are purchase returns as well. So how much we have we have paid 8,000 cash. So purchase return is also there. So this is the total amount we have to record. Second, third, PAT. So we have sold goods to PAT. So we have entered sales. We have to prepare PAT level. We have to sell the trade balance. So we are allowed in discount. So we have to record that. And we have paid. We have received cash. Then void amount is the customer. We have sold it. So 2,700 and we have allowed some discount. And we have received balance 320. Purchase returns. This is the discount. What is that? Repair account. We have paid. We did. So we have got some discount. Discount received. Yes, 170 we paid it. 4,000 then we received discount of 624. So amount we have paid. Amount we have paid is cash. How much we have paid? So we can see the time. 1 finally we have paid everything. So this is how the each and every account is written. So we have to we have to do the posting. So then accordingly we have to prepare all the ledgers. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So below we have purchased. We have purchased from below and there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Nicholas account is over. Now we have to prepare 9-month account. So 9-month is the customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount and we have paid. So what are the amounts? Sales, sales return. So discount allowed, cash. So 9-month account is also done. So now uh, Walter supply. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received in cash 6,840. So we can see it as the cash flow. Then again burger also we have purchased from burger. So 5,200. So they are purchase returns as well. So we have we have paid cash to burger. So what is the discount? They want reading the discount. So we just see. Then let us just use this. So remember the first one, the cost is this. So then cost car. So we have sold goods to car. So we have to enter sales. We have to prepare car account. We have even made the sales account. So we are allowed discount. So we have to remove that and we have paid. We have received cash. So we can then void account. Customer we have sold him. So 2,700 and we have allowed some discount and we have received